Wow, this year has been a super weird year because bad news seems to keep happening non-stop, one after the other. First, we had the Russian-Ukraine war. Then, sky-high inflation. The market started crashing. China had some property crisis. UK economy is crashing. The rising US dollar may cause a global recession. And by the way, it's still not over yet. We still have 2 months to go before the year ends. So, buckle up. Now, the latest bad news that's going around is that Credit Suisse and Deutsche Bank are in trouble and may collapse soon. You might ask, why is this bad news? That's because both Credit Suisse and Deutsche Bank are considered as systematically important financial institutions, aka too big to fail. These banks are super connected to our economy, and if they fail, they will pose a serious risk to the economy. In many ways, this looks very similar to what happened during the 2008 Great Financial Crisis, where the Lehman Brothers collapsed, leaving a trail of destruction behind. So, in this video, I want to explain what is going on, why they could be collapsing, and what could actually happen. But before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I will show you a cute bear. Alright, let's start right now. In the past 1 month, Credit Suisse stock has gone down by 25%, which means that technically, the stock has actually outperformed Tesla. But if you drag it out even further, you will see that the stock has fallen by 95% from its peak since 2007. This is the same for Deutsche Bank, which has dropped by over 90% from its peak. So, what is exactly going on with these two banks? Well, as a matter of fact, there's a lot going on. The whole thing started earlier this month, where Credit Suisse told employees that the bank is at a critical moment, and they shouldn't confuse the day-to-day stock price performance with the bank's strong capital base and liquidity position. And funnily enough, someone pointed out that in 2008, Lehman Brothers said the exact same thing. Our capital position at the moment is strong, then went bankrupt 1 week later. The bank also called customers over the weekend to reassure that everything is alright. Can you imagine if one day CPF calls you and be like, "Hello, we just want to let you know that everything is alright here. Your money is still safe with us." I'm sure you will freak out also. Obviously, none of that calmed anyone down. It had totally the opposite effect. Everyone be like, "Sure not." When this news broke out, Credit Suisse 5-year credit default swap quickly spiked to all-time highs. The last time it was this high was during the 2008 Great Financial Crisis. The name credit default swap sounds super cheap, but it's basically insurance which bondholders can buy. So let's say if Credit Suisse suddenly defaults on their bond payment, bondholders will receive an insurance payout. So the riskier the investment is, the more expensive the CDS becomes. Basically, the market is trying to protect itself against a potential Credit Suisse collapse. Currently, traders are pricing in that Credit Suisse will have a 23% chance of going bankrupt within the next 5 years, and for Deutsche Bank, a 17% chance. So that's what's going on right now. But here's the thing, these two banks actually have a very long history of bad stuff going on. Credit Suisse hasn't been doing so well lately. In the last 3 quarters alone, they've already lost $4 billion, which is a lot of Chai fan. Prior to that, they were hit by the Archegos scandal and lost $5.5 billion, and the Greensill scandal, which cost them another $1.7 billion. Later on, the bank got hit by multiple credit rating downgrades. All this bad news just caused more and more clients to lose confidence and start withdrawing from them. Second, Credit Suisse had been involved in quite a lot of scandals. And by a lot, I mean a lot. The Guardian published a huge list of scandals which stretches all the way back to 1986. They were involved in stuff like concealing losses, tax evasion, money laundering, tax evasion, misleading investors, and even more tax evasions. Same for Deutsche Bank, which is also involved in a lot of scandals too, like money laundering, manipulating LIBOR interest rates, violating economic sanctions, and yes, the usual tax evasions. But being naughty banks aside, people are super worried now because 1. There are concerns that Credit Suisse may be unable to meet their credit default swap obligations. 2. the co-head of global banking who had been working at Credit Suisse for 27 years, suddenly quit his job. 3. They are consistently losing money through business activities, fines and scandals. Quick pause, let me share a quick message from this video's sponsor, Webull. This month, Webull has further improved their sign-up bonus to $130 worth of free Tesla shares and a free Grab voucher worth $10. All you'll need to do is deposit at least 2,000 SGD into Webull, make one buy trade on either US stocks or US ETFs, make another buy trade on US option, while maintaining a 2,000 SGD net account value for that 30 days, and you will receive all your rewards. So if you are interested, you can sign up with my link down below. With that being said, let's get back to the video. So what will happen if Credit Suisse and Deutsche Bank collapse? Just kidding, the world won't explode, but a lot of other bad things will happen. In 2008, when the Lehman Brothers collapsed, many investors were worried of losing money and quickly withdrew $196 billion from their money market accounts. If it had actually continued on, the economy would run out of liquidity and would have collapsed. And due to the recession, unemployment rates skyrocketed and many people lost their jobs. But the biggest worry is something called the contagion effect, where it's like a domino effect. When one company collapses, it can cause another company to collapse, then another company to collapse, and so on. This was exactly what happened earlier this year in the crypto world when Luna and UST crashed, causing Three Arrows Capital to fail, which caused other companies like Celsius, BlockFi, and Voyager to fail too. Currently, Credit Suisse is managing around $1.5 trillion worth of assets, while Deutsche Bank manages around $1.3 trillion worth of assets. Both of them are much larger than Lehman Brothers, which had only $680 billion worth of assets at its peak. So if any of these banks fail, it will be super bad. But the question is, will they collapse? Jim Cramer says that he's not worried, which according to the inverse Cramer rule, we should be worried. Just kidding. Many analysts believe that it's unlikely that they will fail. Here's why. First, even though they have been losing a lot of money, they still have a lot more money. In July, they reported that they have about $37 billion worth of Tier 1 capital. Basically, all these are the core capital held in the bank's reserve and is used to fund their business activities. On top of that, they also managed to raise additional $17.2 billion by issuing bonds. At the same time, they have additional $44.2 billion worth of emergency funds as required by regulators. In short, they have to lose a total of $97 billion before anything happens. Second, Credit Suisse financial ratios actually look quite good, despite losing so much money. That's how you know Credit Suisse is a rich boy. Their liquidity coverage ratio is actually higher than many other banks, while Deutsche Bank has similar ratios. This ratio measures the share of highly liquid assets to ensure its ability to meet short-term obligations. Their total capital ratio and common equity Tier 1 ratio is one of the highest among other European banks. And their stable funding ratio, aka ability to cover long-term liquidity obligations, is also quite similar to other banks. When you put all this together, it means that Credit Suisse and Deutsche Bank are unlikely to default anytime soon. Third, Credit Suisse is planning to do a major restructuring soon, like cutting off a part of their workforce, reducing their liabilities by buying back debts, and exploring radical cuts to its investment bank. All these are set to be announced later this month when they release their third quarter results. Here's my takeaway. While there's news going around that Credit Suisse and Deutsche Bank may default, it's very likely that all these news are overblown. Right now, we can see that fears have already subsided a little, as CDS prices have started to come down. If worse comes to worse, the privilege of being a bank that's too big to fail is that in the event that they might fail, the government can easily step in and bail them out, just like what the US had done for many other banks back in 2008. So in short, you don't have to worry too much for now. Anyway, that's all for this video. Hopefully, you find it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.